Hello traders, if you have been seeing forex trading as a difficult thing, if someone has ever told you that forex can't be learned easily and you are about losing interest, then this video is for you. I want you to take your time and watch this video till the end. Once again, I welcome you into this video. This is Jobax FX learning made easy, guys. So today we'll be going on the basics guide in forex trading. There are top 4 basic guides in forex trading you should know. The number 1 is that you need to know the meaning of forex. What is the meaning of forex? So what I have here is that forex trading, okay, that is the short form. The elaborate form means is the foreign exchange trading. So forex trading means foreign exchange trading, guys. I'm going slowly, guys. Forex trading involves the buying and selling currencies in the global market to make profit. So when you want to buy currency, you want to sell currency. So it's like when you go to the market trying to buy anything that has to do with buying and selling, for it to take place, is what we call the exchange of a trading. A trading just took place when somebody buys something and someone sells something. But when it comes to this industry, it is foreign exchanges. Now, you don't exchange goods for goods or services for services. What is being exchanged is purely foreign currency. So these are being done in the global market. So traders exchange one currency or the other based on the fluctuation of the exchange rate. Now the rate at which is being exchanged differs, and that's what make the currencies to be taken advantage on. At one range you're going to have a higher price, and at some other range you're going to have a lower price. For instance, if you believe that the value of euro, that's one of the currencies, all right, will rise compared to US dollars, United States dollars, then you might buy the euros and sell dollars, hoping selling dollar at a higher rate. Now, what happens is that when you are buying euros, you are indirectly selling dollars. So when you buy one, you are selling one. All right. I hope you guys will understand better further. And the next thing we need to check for the basic is the major currency, 2A. Since forex market has to do with buying and selling of currencies, now we have major currencies and exotics. Guys, follow me gradually. Now the major currencies we have here, look at them, 8 in number. We have the United States dollar. It has the symbol USD. These are the things we'll be seeing in trading. We will not be seeing all this right up complete. The euro, that is UER, the British pound GBP, the Japanese yen JPY, Swiss franc CHF, Australian dollar AUD, Canadian dollar CAD, New Zealand dollar. All these are example of major currencies. The reason why they are called major currencies is that they are traded in the financial market. Most of the time they are traded in the financial market, and they are traded now. This number is in a particular order, so we have according to top ranking, guys. Take note. And the next thing we have, the 2A that you guys need to take note of, is the exotic currency. Exotic currencies are currencies that are not traded at the financial market at the top level. We have the Turkish lira, we have the South African rand ZAR, the Brazilian real BRL, Indian rupees INR, Mexican pesos MXN, Singapore dollar SGD, Thai baht THB, Hong Kong dollar HKD, Russian ruble RUB, Egyptian pound EGB. These are the exotic. Now there is a way we are going to pair them. When you pair the major currency and the exotic currencies, they're going to give us pair. That will take us the next thing, on our list to be the currency pairs. That's the third part of the second point. The currency pairs. Okay, the currency pairs. Now, the currency pairs we have is the major currency pairs. Now, when we talked about major currency pair, is that this major currency. Now, let me go back to major currency and show you guys. Sorry, it's a detailed information. Guys, can you see this major currency? Once you pair any of this currency from number 2 with this number 1, it's called major currency. Let's go back and see the example, guys. Now, guys, look at it. With euro, now this EUR is euro. When we pair it against USD, is a what we call major currency pair, euro USD. So you are pairing euro against dollar, GBP USD against dollar. It's called major currencies. And these major currencies, they are traded and have liquid currencies. Liquid currencies that they have a large amount of money, typically involve US dollar and another major global currency. So any major global currency that involve with the US dollar is a major currency pairs. Then we now have the minor currency pair. Any of the currency pairs that's from the major currencies pairing each other apart from dollar is called minor pairs. Guys, take note. So when euro is pairing against GBP, not USD, is a minor pair. When Australian dollar is pairing against JPY, is called what? Minor pair. All these are pairing that do not include the US dollar but involve other major currency pairs. Make them less liquid than the major pair. That means they don't have more volume into the market compared to the major pairs. And the number 3 pairs that you guys have to take note is the exotic pairs. The exotic pairs are under those exotic. Once we pair them with the major currency, they are exotic. We have the rupees and all of that. When we pair them with any of those major currency pair, we have the rupees. For instance, now we have the United States dollar against the Turkish lira, euro against the South African rand. Okay, they consist one of the major currencies and the other currencies from an emerging or a smaller economy, often making them of less liquidity. Now, guys, the next thing we need to go is the number 3 thing you need to note. Take note of this important thing: trading sections. Because trading is happening, there should be time for that trade to occur, and that's what we call trading section, guys. Now, trading sections, we have basically 3 trading sections, in a sense that the first trading section is divided into 2. We have the Sydney section is under Asian section. So we have the Asian section, guys. We have the London section and the New York section. Now the Asian section is divided into 2. We have the Sydney section and the Tokyo section. All these they have their opening time 10 p.m. UTC. That's United Standard Time. It means it has to do with any time in your zone. UTC, anytime in your zone, is the neutral time, and it is 0 anytime in your zone. When you check the Greenwich meridian, anytime in your zone, you can convert it to whichever country you are residing, guys. It starts from 10 p.m. to 7 a.m. Tokyo section starts from 12 a.m. to 9 a.m. And then the second one we have is the London session. That is the European session. London session starts from 7 a.m. UTC to 4 p.m. UTC. And the next is the New York section. The New York section, that's the Northern American section. It starts from 12 p.m. UTC to 9 p.m. UTC. Now, I want you guys to understand the most important thing here. In each of this time, one of the sections overlap with other sections, and this make the activities of the market to be going 24 hours a day. Guys, this is the reason why the forex market is being traded 24 hours a day, because each of the section is overlapping with another session. So when a section is about to close, or when a section is closing, there's another section that is on for 24 hours, guys. So they are overlapping sections. You see, London is overlapping with New York, and this is the time. Sydney is overlapping with Tokyo. This is the time. Now they are trading hours now. The trading occurs 24 hours and weekends. Now weekends, some of the brokers will allow it to happen, but weekends it normally happens majorly on cryptos. So trading starts from, it opens over the weekend from 9 and closes on Friday 10 p.m. That's on Sunday. But however, some brokers offer limited trading on weekends, particularly with what? The cryptocurrency, guys. Now, why is it that the forex market opens 24 hours? I believe I've said it. Let me say it again. It's because of what? The span multiple times zone across the globe. When one of the financial market centers closes, another opens. Ensure that the trading continues without interruption, guys. There is no interruption at all. This market and the forex market highly liquid and accessible to traders worldwide at any time during the trading week. It means that as long as you are a trader like me, you can trade the market anytime, at morning, at noon, and at night. All right, and this happens. There are market activities that happen, and they are liquid time. The Sydney session, the Tokyo session, the London session, and the New York session. All these things, there are liquidity, and it varies. So guys, gradually we'll be going deep in depth into this. Meanwhile, if you are new to this YouTube channel and you find this content educative and informative, kindly hit on the like button, subscribe, and turn on the notification bell, and don't forget to comment down below. Let's go back now. In conclusion, we have the 24-hour nature of the forex market provides flexibility for traders across the world. You can be anywhere and you trade, guys. This overlapping session creates opportunities for high liquidity and volatility, guys. Liquidity and volatility will be explained in my subsequent videos. So guys, check my subsequent videos to see video on liquidity and volatility, which should be used for more active and profitable trading. Understanding these different market hours is essential for traders to plan their trade. You see why trading hour is not just useless. You need to know at what time you need to trade. What time is convenient for you? What time do you master that you want to start this trading? Okay, it's based on expected activities and volatility during this section, guys. And the last but not the least is the foreign exchange. What is the role of the foreign exchange market? This market, what is their role? Number one, they enable international trade. It means that you can trade beyond the boundaries of a country, beyond the boundaries of a country or a continent. Number two, they set exchanges rate. That means they try to curtail, all right, the rate at which these exchanges happen. Number three, they provide liquidity and capital flow. I repeat, liquidity simply means money. Okay, they provide the money available. And you know what, guys? Every day in the forex market, over $6 trillion is being traded every day. And number four, they provide risk management and hedging. Number five, they provide support global investment. Numbers in summary, the forex market is vital for supporting global trade, investments, and economic stability by enabling currency exchange, determining the exchange rates, and offering platform to manage currency risks. So guys, these are the little basics, the 4 basics you need to know in forex. These are just the basics. It is so simple. It is simple. You don't need to make it complicated. It is simple. All right. Once again, this is Joe Bags FX on your way. If you love this content and you want me to be doing more of this content in depth, kindly hit the like button, subscribe, turn on your notification bell. I can assure you in no distant time you will be a pro forex trader and you start cashing out from the financial market like I do. See you in my next video. Peace. peace.